This is Jane Low, and I'm at the Singapore FinTech Festival 2024. And with me today, I'm very pleased and very privileged to have Effie Dimitropoulos, who is with AUDD Stablecoins, who is going to be sharing with us on everything about stablecoins and the latest developments. So thank you so much, Effie, for your time today.
Thank you so much, Jane.
Yes.
Really appreciate being here. And Singapore FinTech Fest, what an event it has been, hasn't it?
Yeah, is it your first time here?
No, it's actually probably my third time at the event.
Okay.
But it's been a very interesting time because just before this event, there was another event that's all focusing on fintech and digital assets and policy and regulation. So it's an exciting and vibrant time to be in Singapore.
Oh, it's an exciting week as well. It's the US elections going on, and I think that also, add a lot of excitement and buzz to the overall atmosphere as well, right?
Absolutely. And despite what, people have in terms of their political preferences, it's certainly been an interesting time for both the banking world, the fintech world, and the digital asset space. Certainly some hype and excitement there.
Yeah, let's dig in. So stablecoins, AUDD stablecoins. So tell us about the company, and I understand that you are also a blockchain technology service provider.
That's right. Yep. So AUDD stablecoin was born out of a fintech payments company. So for the past few decades, we've been dealing with our parent company, Novati Group, has been dealing with the payment space in alternative payment rails. And what that means is everything outside of a banking or a Visa and MasterCard type environment. So if you think about things like prepaid cards or voucher receipts or barcodes or QR code payments, mobile wallets, digital tokens, they are all alternative payment methods. And so for the past couple of decades, we've been dealing with that kind of technology. So the rise of crypto, digital assets and digitization of money has meant that we've been able to digitize the Australian dollar and other currencies around the world, but our particular focus is the Australian dollar, and created a digital token version of an Australian dollar called the Australian Digital Dollar Stablecoin, AUDD.
So a lot of people will have questions about, what is the difference between a stablecoin and electronic money, e-cash, digital cash, digital money? What's the difference?
The main difference is that a stablecoin is generally on a blockchain technology. Digital money, digital currency tends to be simply an event on a ledger, if you like. So even if you consider what you have in your Google Pay wallet or your Apple Pay wallet or your Samsung Pay wallet, that is actually also digital money. The difference is that it's not on a blockchain and it's not issued by the bank necessarily. And most stablecoins today are issued by private companies and not banks and reserve banks and central banks.
Right. I guess there was a panelist that brought up this analogy about the Hong Kong dollar, how it's issued by the private banks in Hong Kong, and rather than the Hong Kong Monetary Authority. So that's kind of analogous to that concept.
Yeah, it is, and it varies across the world. So in some jurisdictions and geographies like Hong Kong, that is the case. In other areas, in terms of stable coins, they might be considered securities or they might be considered tokenized deposits. There is a lot of terminology out there, and I think that's part of the reason that people, want to know a little bit more and want to understand the difference between each of those things. But the predominant factor in a stable coin such as AUDD and others that you would have heard of, USDC or USDT and the like, that they are utilising blockchain technology and not the traditional banking rails that digital currency today is operating on.
Yeah, I got more questions about the blockchain technology, but before we go into that, right? So stable coins, I think our audience would also have this view that it is stable because the value is pegged to say, for example, in the case of AUDD, is pegged to the Australian dollar. In the case of USDC, is pegged to the US dollars.
That's right. But there are other types of stable coins, and I think that it is important for your viewers and listeners to understand that there are different stable coins. There are predominantly three, I should get it right. 3 different stablecoins. One is what we're talking about today and what we are, and the most popular stablecoin, which is a fiat-backed or a sovereign currency-backed stablecoin. So one stablecoin, one Australian dollar, one US stablecoin, one US dollar. There are two other stablecoins, and one is a commodities-backed stablecoin. That could be commodities like gold or silver or oil in some cases. So basically they peg it to the value of that particular commodity. So they are commodity-backed stablecoins. And then there's a third stablecoin, which is called an algorithmic stablecoin. Now, I have to be clear that I am not extremely familiar with all that goes, and this is the key point, that probably not many people are very familiar with what goes on behind an algorithmic stablecoin. But basically, it is backing with a number of other assets, other crypto assets, to form a stability within within mathematics, and there's a little bit of volatility, but it's basically they over collateralize, so it makes it very tricky for a consumer to sort of understand really what an algorithmic stablecoin is.
Yeah, I want to come to that later when we talk about the lessons learned, right? When
Absolutely.
it comes to Terra Luna, because that is, I guess, an algorithmic-backed stablecoin.
That's right.
But again, before we go into that, right? So talking about, the fiat-backed stablecoins, right? I think another common question that people have is how different is it from CBDC?
Yep, a little bit different in terms of the fact that a CBDC is a central bank digital currency. So what that means is that where your central bank in a country is responsible for monetary policy and minting of actual notes and coins through their centralised mints, they also produce a central banked digital currency. So it is the responsibility of the Reserve Bank to do that. In terms of stable coins, they can be issued by banks, they can be issued by private companies, they can be issued by anybody. Now, when you say that, it kind of says, well, what, Jane and Effie can issue a stablecoin? Yeah, we could, but it wouldn't be very trusted if that's the case. So there are a number of standards that need to be met, either from a self-regulatory point of view or from a regulatory point of view to earn the trust of consumers to be able to utilise a stablecoin.
That's right. Trust is a very important element in this stablecoin ecosystem. But again, before we come to that topic, final question about introduction to stablecoin. Why does it matter? What are the use cases? We can use digital money, like you say, right? We can use cash. Why stablecoins?
Great question, Jane. And I think in many countries like Australia, that is a very common question, even by my peers, by my family and friends. They say, what are you doing a stablecoin for? We have a very good payments network in Australia. The same can be said for Singapore or Hong Kong. Where it becomes tricky for any money in any part of the world is when you cross a border. So borders break money. What I mean by that is, in Australia, I can make payments in 20 different ways without a problem. I can tap, I can card, I can transfer, I can instant transfer, all of that sort of stuff. But when I want to send somebody money in another country, then is when things become trickier. It takes a long time. It's usually needs to be done during business hours and during banking business hours.
That's right,
it costs a lot of money. There are multiple parties involved. So whilst a consumer may not know that if I send something by Western Union, that I assume that there are two parties involved, me and Jane in the other country. That's not the case. So when I send money via an app or at a particular store, it actually takes a number of providers in the middle to actually make that transaction work. So when it comes to businesses and making larger trade payments or cross-border payments or remittance payments, that's when things like stablecoins come into their best light, because they are faster, they operate 24/7, 365 days a year, and basically when I send it, there is very clear transparency of when it gets to you. So you are able to look on the blockchain, and we don't make it tricky for customers to kind of go, how do I look on a blockchain? That is reliant on user experience in apps and in the applications that are utilised. But it is basically that cross-border space where stablecoins shine and where their highest utilisation is today.
Okay, so we just talk about the benefits. It's faster, it's cheaper, it's 24/7. But there's also other considerations I think that people would have. Is like earlier we say that you mentioned that it's a one-to-one peg to the underlying
Asset.
currency, right? So I guess a common question that people would have is, how do we know about this collateralization process? What are the principles to ensure, people trust the reliability
Yep.
of this peg?
Great question, Jane, and that is something that as stablecoin issuers is very important to the industry because we do consider our industry sector to be a little bit newer than other fintechs in the space. And so what is going on globally is basically people are searching for standards, okay? And so there is a great organisation, an association called Stablecoin Standard, which basically global stablecoin issuers, so not only the US dollar stablecoins who are part of the alliance, basically get together and have got together, and now we have issued a set of standards that basically try to do exactly what you talked about: elicit trust in for the consumer to be confident that I can redeem my money one-to-one, that the backing and the reserves of those monies are in a trusted location, that I can transparently advise my consumers where that is held. So that comes in the form of audit or attestation reports that are published publicly. So there are a number of standards that are being met across stablecoin issuers, so as that collectively, I want to be able to look at a stablecoin issuer and say, can I trust them? Well, what do I need to look for? I need to look for a particular set of standards. And as I said, those have to do, can I instantly get my money out if I need to get my money out, like now? Can I instantly get money when I deposit? Can I trust that, and I can view at any point of the day or night where the money is being held? So it's all of those that we aim to put in place that gives people trust, which is interesting because if you do consider your current banking environment, and I'm not going to suggest that they're not doing the right thing, but do you know where your money is actually banked and what's backing the money? Is it gold? Is it other people's money? You don't know that as a consumer, but they have built that trust over numbers of years, decades in fact, and so that's what we need to get to, and we will get to that. And so it is important that people do look for that information about any stablecoin that they do participate in.
Yeah, there's a lot of discussions during this FinTech week when it comes to the principles governing the stablecoin, the trust in the stablecoin ecosystem, like transparency, segregation of assets, disclosure. So all these are in the works. So that's great to hear. But I think when it comes to trust, right, the other question that you touched on very briefly earlier is algorithmic stablecoins, right? And I think that the trust factor was sort of brought to the forefront during the Terra Luna what do you call it? Crisis.
Crisis, yeah.
Right. So can you tell us what are some of the lessons that we can learn from that in terms of consumer protection and trust?
Yeah, absolutely. So whilst I'm not an expert on algorithmic stablecoins, it was an interesting time for us in particular because we, as AUDD Stablecoin, had just announced that we were going to issue a stablecoin, and within weeks of people even starting to ask questions about an Australian dollar stablecoin, we actually spent the next 6 months educating parties the differences between the stablecoins and trying to assure people that the one that we were going to be involved with was a fiat-backed stablecoin. So the lessons that we learned out of that was how important education is. So ensuring that you do try to approach it from the perspective that it's easy for people to understand. So that's one of the things that algorithmic stablecoins, as I said, we've been operating a stablecoin for almost 2 years now, and I still put my hand up and say I don't quite understand how algorithmic stablecoins work. And that's a problem because if I, who is in the industry, don't even understand it, why would and should consumers look to that confidently, unless that is their full-time job and role to partake in that. And of course, many of us partake in either investments or activities that we aren't so familiar with, but we've all learnt the lessons that where there is not enough familiarity, things can go awry. And so I think that's the important thing, and the lesson that we learned is to be very clear in our education, clear in our proposition, provide as much information up front as possible, and then participate in the ecosystem, both with industry, with academia, with regulators, policymakers. We are regularly dealing with our corporate regulator, our Treasury, Reserve Bank, all of those parties to ensure that we are staying ahead of what's going on, and that we're constantly informed, so as that we can inform our consumers and our businesses as to what they're getting involved in.
So what do you think are the sort of, when it comes to education, right, what do you think are the most common misconceptions that people have when it comes to stablecoins?
I think the misconception is, it comes down to the basic level that that all digital assets are the same, or that all cryptocurrencies are the same. So when you initially say to people who aren't familiar with the industry, oh, it's a stable coin, so it's a digital asset. And so the first thing that people come to mind is, so it's crypto. It's like, well, it's cryptographically secured, but it's not a volatile asset like all of the other crypto assets. So two things that I always point out is, a stablecoin is easy for a consumer to understand, because if you get one AUDD now, it's worth one AUD later, and in 10 days, and in 100 days, and in 1,000 days. If I get one BTC now, it is worth, I think it's the all-time high at the moment, but let's say it's worth 74,000 US dollars today, and tomorrow it could be worth 50,000. So that fundamental basic principle is the one that we always talk to people about, who don't know about crypto assets. Now, what is the other challenge in that space is that because consumers put it in that space, if regulation is not clear, and it is not clear in many jurisdictions, then the industry itself also perceives a stable coin as a crypto asset, and they are all put in the same bucket, and all the risks are put in that same bucket, and they're simply not the same, because as we said, we have one which is stable to and redeemable and issued to a stable sovereign currency, and others that are just not. They're just volatile.
Right, yeah, I was going to ask you a question about, the difference between Bitcoin and AUDDC or other, stable coins, but you just answered my questions. It's around, the main difference is around the volatility, isn't it?
Absolutely, and it's demand and supply, and what's happening in the political space. As we saw, we had that all-time high as a result of the US elections just recently, and you don't get that with a dollar. The dollar just stays at the dollar that it's pegged to, and that's it. And so, it's not an investment and holding type of situation with a stable coin. It is a means of stabilising perhaps your digital portfolio, or utilising it for speed of interaction with other currencies or cryptocurrencies, if that's, the space that people are in.
Yes, I have one final question when it comes to stablecoin and cryptocurrency in general, about barriers to adoption. You just talked about the education, raising awareness, right? And I think that one common question that most people would have is, how safe is it to hold something that is secure on a blockchain, right? Because I guess to some extent there's a lack of understanding about how the blockchain technology works, and it sounds very complicated to many people. The older generation, for example, our parents' generation, have no problems understanding what AI can do. They don't ask questions about, what is deep learning, what is, propagation. But when it comes to cryptocurrency, the first question is, what is blockchain?
Yep.
Why do we need to explain technology to, the consumers when it comes to adoption? And is it necessary?
It's a excellent question because, it's interesting. We haven't had to explain technology in terms of the banking system, yet there's a whole lot of technology behind that. And we haven't had to explain the technology behind the internet. People just use it. And to an extent, I don't think we need to explain blockchain technology to end consumers. However, I think when you draw a parallel, and I'll give you one of the parallels in particular that I like to use with people who don't understand the technology, and they say, well, but I need these keys that belong to these wallets, and if I lose those, then my money's gone. And we say, yes, but like a wallet that you hold your cash in, if you lose that, it's gone. So it's essentially the same thing. The difference is the wallet is a physical thing you see, you put in your pocket, and you open it very willingly and easily and get that cash out. The difference is, in a lot of ways, a wallet that holds digital currencies is way more secure than that, nice, beautiful leather wallet that you have in your handbag. But it does require that extra layer of security, much like, if you go to a bank and you need to show your KYC, so they need to know your customer information by you providing either your passport or your driver's license or other points of identification. That's very similar to when you're holding a wallet with either a centralised exchange or a wallet provider. You also need to do those same AML checks because we do need to be able to know and if there is an issue of a fraud or a scam or something like that, we do need to be able to get to that underlying party. So in terms of explaining the technology, we haven't had to get involved too much in the explanation of the technology, again, because of that abstraction, and what I mean by that is I don't know how my tap to pay works. I don't know how my Apple Pay works. I don't have to explain any of that. All I need to know is that I can see a balance. I can see that it moves. But what I do explain about the beauty of the blockchain technology is that you can actually see all of the activity in real time if you wish to do so. So that is the only difference that I explain to people in terms of the technology.
It just sounds like more people need to use it to understand how it works, right?
Absolutely.
So at the moment, I think it's still a bit of a mystery to many.
Yeah.
I think, many would be comfortable using, say, Apple Pay or Google Pay, but I guess perhaps it's, the lack of experience using the blockchain-based wallets.
And I think what you'll find is there will be more traditional finance institutions utilising blockchain technology, and they won't have to be explaining that to their customers either, because they'll have the same user experience at the on the front face, on the user interface, but in the back end, no one knows today whether it's a COBOL database or a PHP data. You don't know those things, and so it'll be a blockchain-based system, but people won't know that because their user experience at the front end will be the same.
That's right. Yeah, I think there's currently a lot of focus on what's the difference in terms of consensus protocols, and there's a lot of discussions around that, and I think that adds a lot of confusion to the end users, the consumers who are using these, right? Because at the end of the day, whether it's proof of work or proof of, stake, does it really matter? I'm not sure.
No, I don't. I think, Jane, you're right. I don't think it does. It does matter, but in a lot of ways, I think even we, the industry, have confused some consumers because we all say, we're blockchain technology, and we put that in the front, and it doesn't need to be in the front. It actually needs to be in the back. The front always still needs to be an easy, simple user experience, and then supported by the trust, so as that people know I trust that when I do a transaction here, it's going to work, and it's going to be cheaper, faster, better, and efficient.
Right, yeah, you have a good point, yeah. So I am quite conscious of the time. Ooh, wow, okay. Time flies.
We can talk forever on this. There's so much to say.
Time flies. One last question.
Sure.
Do you have Bitcoin?
Yes, I do. Yes, I do. I was one of those. I'm one of these parties who likes to understand how things work, and so a new thing comes out, and I'm going to go, how does it work? Let me go and find out. And so I go and buy this stuff, and then I go and do some learning, and I earn this other stuff. So I can tell you, Jane, that I think I have something like 25 different types of cryptocurrencies in various wallets, because I kind of go, I wonder how this wallet's different to that wallet. So I always have a bit of a joke that I'm glad that I have set up my password manager, if I pass away, to be handed over to someone else. And I've said, when you get that, go and look at everything that I've got, because there'll be stuff there that'll be worth something or worth nothing, but it'll all be there. So, yeah.
Oh, wow. Okay. That deserves another podcast, I think. Key management when it comes to cryptocurrency.
Absolutely. Absolutely. Oh, not quite, but I need, yes. Again, and there's lots of password managers that I have as well. So, yeah.
All right. Cool. Okay. So, Effie, thank you so much for giving us an introduction into stablecoins, some of the benefits and some of the considerations that we need to think about to start this journey into cryptocurrency. So thank you so much for your time.
Thank you so much, Jane. It's been a pleasure.